Hey traders, this is Blake Morrow with Trader Summit, and with me today, every Friday, is Jim Welsh from Macro Tides. How are you, Jim?
I'm great, Blake. Hope you're doing well. Hey, we're talking. It must be Friday, right?
It must be Friday, and you know what? It's been a hell of a week. We've had a lot of volatility this week.
Yeah.
Big meeting, FOMC meeting. You know what's your takeaway? And I know that's a pretty packed question, but what's your takeaway from this meeting?
Well, it reaffirms things that we've been talking about really for weeks and weeks, that the Fed would use the September 22nd meeting to tee up a launch, an announcement of tapering at the November 3rd meeting. And I think that's pretty much set in stone. Powell said, yeah, in terms of inflation, broad agreement that that's already been achieved. Importantly, he's first among all the equals, so to speak, right? He gets one vote, but his vote influences.
Sure.
And he said in terms of inflation, and we're there, and in terms of the labor market, we're pretty much there. So I think that to me was the clue that yes, we're definitely going to see an announcement at the next meeting. Number two, he also said be done by mid next year. Well, the only way that happens is if they announce it November 3rd, likely started beginning in December, do 15 billion a month, not 10. And at 15 billion, it gets wrapped up in 8 months, which lo and behold is mid next year. So to me, there was really, very significant. He didn't say any of this, but if you connect the dots, that's to me what the message was.
Yeah, it's when he said that, I was like, oh, I got to buy the dollar. I'm like, I don't know exactly what the number is, but it's more than 10. So yeah. I'm going to get long the dollar, at least intraday. Yeah. But that was really like a lot of us cued off of that. And, you walk away and you go, wow, the Fed chairman was actually a little bit more hawkish and probably a little bit more so than what the market expected. Now we've seen a lot of volatility in this market because of, some obviously opposing forces or crosswinds, I guess is a better way to look at it. You got the Fed on one hand, but it seems like the market is, digesting the idea that we're going to be tapering, the Fed's going to be tapering bond purchases. So what does that mean to you? I mean, we had a nice sharp bounce back in stocks since early this week, and really we haven't given back much ground. So what's your take? I mean, it doesn't look like we're going to get a taper tantrum.
No, again, to me, it isn't about tapering. It's about the coming supply deluge. Once the debt ceiling is passed, we're going to see $2 to $2.5 trillion floated by the Treasury in about a 6-month time period. I just don't think that the bond market's going to handle that, especially if I'm also right that inflation, continues to prove problematic. It's higher than they want, and it's going to persist longer than transitory would imply.
Yeah.
In terms of the S&P in the Monday weekly technical review, my expectation was, okay, we're going to see a bounce. Things had gotten short-term pretty oversold. I didn't think Evergrande would turn into a contagion. And I thought that Powell would kind of, he wouldn't specifically lay out what they're going to do. You have to read between the lines to really kind of connect the dots in terms of what he said. So to me, the fact that the Fed wasn't going to announce tapering at the September 22nd would probably lead the equity market to rally. The 786 retracement of the 240-point decline in the S&P is around 4490. So once this bounce is over, and I think it can continue into next week, I think we're going to drop below 4306, which was the low on Monday, before the end of October would be my guess.
All right. Well, I guess the question I ask is what could really pull the market down towards those levels, which I think seasonally it all makes sense. But, that comes up with that brings up the conversation about China. And I know last week we had to talk about, Evergrande and what's happening there. What are your any thoughts from this week's information that you've taken in regarding Evergrande and what might happen moving forward? I mean, you warned us that maybe a China rate a rate cut, like the reserve ratio cut, the
Right.
triple R cut might happen. And actually there's talk of that, you were a week ahead of time getting people thinking about it. This weekend, there's more talk of it. So what do you make of it?
Well, again, I think at some point in time, the Chinese government is going to introduce some stimulus, rate cuts, trying to get banks to lend more, not to property managers, and so forth. I think that is coming. I think also taking some steps to reduce the value of the yuan is also part of that equation. So I think that's all on the way. The thing that I would say in terms of Evergrande, I think they can manage this so it doesn't become an immediate contagion. But there's two things. They're going to lower the amount of growth that GDP has benefited from by this huge surge of building in China over the last decade. Buildings, bridges, airports, you name it, and probably a couple 100 million houses. That has created a high level of debt. It represents about 29% of China GDP. So as that gets scaled back, Blake, what it means for a lot of other emerging economies is we're not going to be buying as much of their stuff, from China's perspective. So I think the contagion isn't probably the big issue. The longer term issue is the economic impact on China's economy. It's going to slow further. And the fact that they're going to be buying less stuff from other emerging market economies that could potentially start to pressure them. None of that's going to happen in the next month. That's going to be longer term.
And that's, it's interesting you bring that up. I talked to another analyst this week that, looked at it as China's situation is more of a deflationary type of, situation in China. But that's good to note that it probably won't be a near-term contagion. And I guess China will probably contain the situation the best it can. So
exactly. The one thing I'll circle back to is this week, the Britain Central Bank met and communicated, I think, very clearly that they're likely not just to talk about taper, they're talking about raising interest rates probably around the beginning of the second quarter or late the first quarter. So they're looking at that time frame, and that's why the pound jumped, why the 2-year bond note for Great Britain is up about 50-60 basis points since the low in August. The German Bund 10-year is up about 30 basis points since its low. So this breakout that we're seeing in terms of treasury yields, the 10-year is comfortably above 139. The 30-year hasn't gotten above its early August high at about 203.5. So when that happens, Blake, I think it just is okay. Guns hot, as Santilli likes to say. Rates are headed higher. And I think that's what's going on. And the very hawkish Great Britain Central Bank, I think, the pound rallied very, very strongly. And I think that caused some ripples, if you will, to hit the dollar as well. But, my take all along has been, we're going to be moving forward in terms of the Fed, removing accommodation faster than ECB in the Euro's 57% of the dollar index. So I continue to believe that as long as the dollar holds above 91.10, the long-term trend is up, and a move toward 100 over the next 12 months is certainly possible.
Wow. Well, Jim, it's interesting. You watch the euro around the 117 level. It really can't even bounce too much. And I think technically we've been looking at it on a break below 117. You're probably looking at least at 116, maybe even lower than that, depending on probably other developments with everything else. So Jim, I want to say thank you. And how do we find out more about Mr. Jim Welsh from Macro Tides?
Well, go to macrotides.com, or if you like, I'd be happy to send last week's weekly technical review to anybody who sends me an email at Jim Welsh, WELSH, macro @gmail.com. And I'll send you last week's weekly technical review, or maybe I'll send Mondays. I don't know. One way or the other, they're going to get a taste of some of the stuff that you and I have been discussing, and what information I provide on a weekly basis, as well as my monthly Macro Tides.
Great. And, traders on the Trader Summit site, you can see excerpts of Jim's review and his newsletter. I personally, I enjoy it. I get it. And I've gotten it for a while, and it's a great piece of information. So I'm glad that you could share your ideas and thoughts with us every week, Jim. If you guys at home, guys and gals, if you like this content, make sure you give us a thumbs up on YouTube. Also, subscribe to the channel below so you don't miss any of Jim's weekly reviews every Friday. Jim, thanks for joining me today. It's been great.
My pleasure, Blake, and have a great weekend.
All right, you too.